Alan Solarsh here, the Passive Income Guru, and this video tutorial and webinar explains to you how to hedge and never blow another Forex account. Before I get started, I just want to tell you that the information in this video is merely my opinion. I'm not a financial advisor. I'm not licensed to give financial advice. So this is just for information purposes only. If you do use any of my information, please do so at your own risk. Trade on a demo account. Try my strategies out, see if they work for you. Once you are profitable, then you can go onto a live account and make your own trading decisions. Past results do not predict future profits. So if you want to be a good trader, stop watching this screen over here, okay? You need to learn how to read a Forex chart. That's how you stay sane. That's how people with big accounts, 18 million, 200 million. Can you imagine seeing a drawdown of $50 million? How do you cope? You can't. So the only way you can do that is by reading the chart. And that way you can stay sane and you can make competent decisions, the right decisions that will impact you in a positive way. So you take low risk trades with high potential profits, not high risk trades with low potential profits. And that's what I found on YouTube is that 99% of the people out there mentoring you, okay, are teaching you the wrong strategies. They're teaching you on a 15-minute chart a scalping strategy to risk 30 pips to make 5. So let me repeat that. Risk 30 pips to make 5 pips. How can that be a good strategy? That's insane. That's bad money management. Here, what I do is I take very calculated trades and I make high profits. You know what the irony is of today? The irony of today is that you guys are cucking yourselves. And you say, I wish I wasn't in this trade. And me, I'm saying, I wish I was in this trade. I'm not in this trade. I'm not trading. I'm too busy, unfortunately. I can't concentrate on my trading. So I'm not trading. And I wish I was in the trade. And I can't get in the trade because I don't know when it's going to turn. So I think I'm going to open up a 10 lot, okay, later tonight, or a 20 lot later tonight, because I'm really convinced that the price of this currency is going there. I really do believe that it's going there. Let me just minimize this. Okay, that's what I think. And let me minimize this. Cool. So I think it's going to this level here, and it's basically peaked everywhere. Look at that. It's above here. If it breaks this fractal here, it's game over. We're going north. There's just a few more over here. There's nothing. These are resistance levels here. And if it breaks it, it's going to go here. And if it breaks it, it's going to go here. And if it breaks that, it's going there. And that's what I think is going to happen. Let me just add this person, because for some reason I have to add people. That's the way Zoom, they've changed their whole setup. Okay, so how do you hedge? People want to know how to hedge. So let me explain to you how to hedge. What you do is, so let's say I'm going to actually open up my browser, and I'm going to go to my calculator. Okay. Right, so if you're using the EA, then this is what's going to happen. You're going to enter in your number over here, the number of your first trade sequence. So let's say you started on a 0.5. Okay, now what's going to happen is that these numbers are going to change. Okay, so we're going to leave this. So these numbers will automatically populate over here. Okay, so what you do is that you highlight all of these trades. So let's say you've got 5 trades open, 4 trades open. You highlight all of this. Okay, in the bottom right-hand corner, it's going to give you what your lot size is. So you don't even have to calculate it, because I know that in this state of mind, when you're about to hedge, you're freaking out. And I totally understand that. Okay, I get it. So instead of freaking out, use the tools that I've given you so that you're able to think clearly without having this negative psychology going on in your mind. Okay, so now let's say the EA, according to mine, my okay, so let's do it at 0.1. 0.1. Okay. Okay, so there it is 0.1, 0.14, 0.2, 0.27, 0.38. So it's approximately that number there. Okay. I don't know why it doesn't round it off properly. I didn't see that before, so it's the first time I've seen that. So if I'm in a sell position, so all of these are sells, I'll then place one trade to the value of 1.09, or I'll work this out on my over here. So let's just do that 0.1, 0.13, 0.19, 0.27, 0.38. And I'll add it up in the bottom right-hand corner. It says 1.07, and over here it says, what's it, 1.09. That's strange. Don't know why it does that, but it is what it is. Okay, so that's what I would do. I would take that number, 1.07, and then I will do a buy trade of 1.07. Now what's going to happen is that your drawdown, your exposure is not going to change. Okay, this amount over here is not going to change, and this amount over here is not going to change. It'll fluctuate between like 0.5% or a couple of percent, and that's it, but it's not going to get any bigger. So if the currency goes north, if the price goes north, what's going to happen? This trade over here is going to go blue. These trades here are going to go red. Okay, but these numbers don't change. It's like a balancing scale. Nothing happens. So you basically, you balance the scale and nothing happens, and now we wait. We wait and we wait and we wait. Now, if you were clever, like I asked you to be, and I sent you the email, and I've said it many times on my Telegram groups, that we have a huge advantage being part of my organization. That's an agreement that I have with FBS, that if you're part of my organization, you don't pay swap fees if you choose to. Now, there's there's a plus and a minus, okay, to the swap fees. Now, the plus is that you don't pay an overnight charge. It's an interest, okay, because you basically borrowed the money. So that's what you've done. You've borrowed the money from FBS. Now, if your trades are in negative, you will pay an interest. But if you are a trader like me, and most of the time your trades are in profit, then obviously it's like having a bank account, and FBS will then pay you interest. So it's a double-edged sword, and you need to weigh up, which account of yours is going to be swap free or have swaps. So if you're trading like me, then don't trade on the bot account. Rather get your swap fees removed on your bot account, and then trade manually on another account and have that account with swaps so that you can earn interest. Okay? And how you enable interest is that you just tell FBS that you want to enable swaps on that specific account. To get your swap fees removed, you need to send FBS an email like I've structured for you, and get your swap fees removed. I'll tell you a little story of what happened to me 5 years ago. I had R1 million in an account, and I over leveraged the account, and I had to hedge, and I was about 88% or so drawn down. I was a novice trader. I didn't know what to do. And I was like most people, I took advice from the Forex company, from their master trader that was supposed to be managing my account. And he said, put more money in, put more money in, put more money in, of which I did. Eventually, I was in terrible trouble. And the swap fee, the overnight charge, is what killed my account. So my account was hedged, but because there was a swap fee and my lot sizes were so large, the equity margin went down every single day until there was no margin percentage left, and I was bombed out of the market and I lost R1 million. So that was my entry into Forex. It was the most painful, excruciatingly painful exercise I've ever gone through in my life. So I feel your pain when you say that you've blown an account and you've had a margin call. I really do. I understand where you're coming from. I empathize. So, and this is why I find that hedging is such an amazing tool, but you need to use it properly. Okay. Don't close your trade in the middle of a candle, and you mustn't close your trade, your hedge, until you are 100% certain that the currency has turned. So my new rule is to hedge at 5%. That's my rule. I don't care. 5% I'm hedging because I now know how to use the hedge properly, and I now know how to use it to my advantage. So as you've seen from my account, so let me pull up my account for people that don't know who I am. And this was an account that really I did in 2 weeks. My other account did 178% profit in 60 days. So this is my one account. And let's try and fix that. Right, here it is. 46% in about 2 weeks. So from the 18th to it was over here that it really spiked. The 28th. So it's 10 days. I did 46.91% profit in 10 days with a drawdown of 6.92%. So a lot of people that over leverage their accounts usually have a very high drawdown, 20, 30, 40%. I don't have that. I'm a very safe trader. I've learned to be a safe trader. You know why? Sick and tired of losing money. There it is. Sick and tired of losing money. Had to find a way of never to lose money ever again. And the only way I can do that is by hedging. And it's a sick strategy if you know what you're doing and you know how to do it. And that's what we're going to teach you tonight, which is very exciting. Right, so let's go to the chart and let's show you what's going to happen. Okay. Groovy. Let me close this down so you don't get distracted. And let's open that. So, what's happening in euro US dollar? Okay, so Lolani, do you want to unmute yourself and tell them what you were thinking and your thoughts? And you almost closed out a trade, and you can speak from experience. This is when you can unmute yourself. There you go.
Yeah, this afternoon I'm about 5% drawn down on the pound versus the US dollar, and opened a hedge yesterday, and the hedge went nicely blue. A buy, it was a buy that I put in, so it went nicely blue. But today there was a bit of a pullback, and it came very close to the entry point. So, but the candles hadn't come close to the 8 EMA yet. So obviously the reverse strategy being the second candle opening under the 8 EMA. So that hadn't happened yet, but it was dangerously close to the break-even point and even going into the red again. So I was frantically voice messaging Alan saying, what should I do? Should I close the hedge in a small profit, and then while it's still in a profit, and then just write it down? And the next moment, and this was, I think, at about 4 o'clock or 5 o'clock. So it was in the middle of a 4-hour candle, and the next moment the price spiked upwards on both the currencies that I was trading, so the Aussie yen and the pound dollar.
Okay, so
they both spiked up.
Let's discuss that. So, okay, so let's say the 371 is your hedge, okay, and this is basically the candle, or this is the candle that you're working on, okay, the 4-hour candle, and this is Aussie yen. So what's happening is that you open the hedge, and then the price goes up. We'll actually work on this candle because it goes below the hedge. So the price goes up, and then the price retraces down below your hedge. The hedge then goes red, not blue, and you think, let me close out the hedge because you're about to go into red. And let me tell you what's going to happen is that the price will then go up. Now, I'll show you what's going to happen in a numbers point of view. You close out your hedge. As you close out your hedge, you lose percentage margin there. Okay? It eats into your margin percentage level. Then your negative trade, this negative trade here, goes more red, and that eats more into your margin percentage. So you've now got less margin percentage to use. Then you think, oh my God, I need to hedge again. So then you open your hedge over here. And that then eats more into your margin percentage. So from opening to closing to reopening your hedge will probably cost you 300%. You've now got 300% less margin to play with. So, and this is why people say this is a double-edged sword, and you need to be very careful with your hedge and how you open it and when you open it. And you need to know that you can open it at the wrong time, and you open it on a support resistance level. It hits that support resistance level and then immediately shoots down, and then you've got both trades in negative. Both my trades here have been in negative since March. I haven't been able to relieve $18,000 worth of equity from this account since March, okay? And sometimes it could be longer. What do you think a hedge fund is? You have heard of hedge funds. So a hedge fund is exactly that. They're hedging. They've got two trades open, and they hedge against each other. That's what a hedge fund is, okay? And it can be very dangerous for you. And that's why I didn't want people to open their hedge a couple of days ago, because we were right over there. And I thought, don't open your hedge. And I know you're in trouble, and I know you're freaking out, and everybody had a large drawdown. I said, don't open your hedge until this fractal is broken, and then open your hedge. When that's broken, then we know that this thing is going north, because we had seen it go 3 times, okay? So my Western American analysts call that a triple top. I don't use that sort of analysis. It's never really worked out for me, but some people swear by it. So the triple top was broken, and as far as I understand it, when you've got a triple top, it usually reverses. So this basically broke the laws of the triple top. Anybody here use a Western analysis of triple tops and triple bottoms and pennants and that type of thing? Do you use that, Nalani?
Yeah, I do look at the patterns as well.
So if you see a triple top, the normal consensus is that it's going to reverse, correct?
Yeah.
Okay.
Yeah.
So this defied gravity and went north. So you need to be very careful and strategic, and that's why analyzing the chart instead of looking at the numbers is very, very important. Okay. Now, Lolani asked me yesterday, how do we draw support and resistance lines? And because it's very difficult on a candlestick chart to draw your support resistance lines, because there's a lot of clutter and interference, because you've got wicks. The wick is this little thin line here. That's the candle, and then you've got the wick. So I found a very clever way of doing that to remove the clutter is to change your chart. So let me go back to the settings. I'll go back to the settings, and in charts here, you click on charts. I'm on an iPhone. So on an Android, it may be slightly different in the settings. You just need to play around and find, and then you've got a line chart. Okay, you can mute yourself, Lolani. And then you go back to the chart, and then you'll see that the chart now is in a line chart. And now you can see where your support resistance lines are very clearly indicated on the chart. So there is your first support resistance line, or it's actually a resistance line, which has now become a support line. So resistance means, if you think of a house, the roof resists you, you can't go through the roof. Support, when you're standing on the floor supports you. That's how you know the difference between support and resistance. Okay, so let's do that again. So let's draw another support line. So there is a support line there. There's one support line. It's not really, that's the bottom of the channel. So let's rather go, it's two or 3 points of touch. 2 to 3 or more points of touch counts as a support or resistance line. So there's a support resistance line. And within the channel, there's another support resistance line. Here it is over there. Okay. So where is it? It's there. It's here. It's like just peaked above it. It's over here. It's over here. So it's within those channels. And when those channels are broken, okay, I like to use the fractal. When the fractal is broken, that's when I know that the direction has been changed, and I can then go. Go long, provided that the second candle, is opened above the ATMA. And it's a tough one because sometimes you may get a huge spike. Let me change my chart back to a candlestick. I don't use those. Okay, chart. So like over here. So I mean, it's like the first. Is this the first? This is the first candle that opens above the ATMA. Okay, and it's this huge spike over here, and you've missed this whole run, and that whole run is massive. It's 70 pips. That candle. So, you know, once you get above like the 200 moving average and it's still trending and it's like strong trending for like 15 minutes, the chances of it coming back are very slight. And that's why a lot of the analysts and mentors out there, they say to you, after a news announcement, wait 15 minutes. Then you'll know the direction. And it's the same thing here. So if you've got that spike, wait the 15 minutes out. Usually there's that volatility within the first 15 minutes. It's usually up, and then if there's no momentum and no buyers, then it'll just come straight down again. So you need to just like take that into consideration as well. Unfortunately, there's no hard and fast rules in Forex. The banks control the markets. We got no say. We just got to follow what the banks are doing. And that's why they say 15 minutes to 30 minutes. If the candle's still running, you can take the trade. But a general rule of thumb for me is waiting for the second candle above the ATMA to either or below the ATMA to go long or short. Okay. So now that you've hedged, okay, and the trade is blue, hopefully, and remains blue. I'm going to make money here. This is going to be such a tip trade. Can't wait for it to turn, and I can then close out my hedge, and I'll make $2,000, maybe $3,000 on the hedge, and then I'll ride it all the way down, and I'll clear this 18. So when it starts going down, this is what's going to happen. Number one, because I've closed out my trade, I'll alleviate some of the margin percentage. Because it's in positive, my margin percentage level will go up. Okay. Then what's going to happen is this number here is going to start decreasing. And that is then going to affect my margin percentage level some more, and I'm going to get more margin back. Okay. And this is where it gets exciting on the chart. And this is why you must watch your chart, is that when it goes south and you know that the second candle is open below the ATMA, okay, and it's dropped below a fractal, Bill Williams says you can be aggressive. Now, a lot of the mentors out there say, don't risk more than 1% of your capital in any trade. I don't believe in that philosophy. You see, you're then saying that you're expecting the price to reverse and you're not trading with confidence. It means that you actually don't know what you're doing. You don't know the direction of the currency. And that's why I use the second candle below the ATMA, because if you go back in time, through the chart, do this in your own time, go back and go and look at the chart, okay? And 95% of the candles, the second candle that opens either above or below, that's the trend. It's very seldom, okay, that the second candle opens and it then shoots down again. So I can't believe I've been speaking for 30 minutes. We'll get cut off and then you'll rejoin the chat, okay, in 10 minutes, okay? So go back in time and go and check. I mean, you'll see that when it's in a choppy market, and when you're in a choppy market, a sideways market, here's a prime example. Is this a good example? Yeah. We're a sideways market. The reason we use the second candle and not the first market is because if you're in a sideways market, you get these false positives. Okay, it's one candle above and then one candle below, and then you get in and you get out and you get in and you get out and you're losing money, and all that's happening is that you're eating into your margin percentage. okay, and your equity is going down and down and down, you're losing money. Okay, you're losing money on the spread, and it's gone down maybe 5 or 10 pips, or maybe 15 pips, because that's what everybody says. Put your stop loss at 20 pips, and it goes down 20 pips, and you get stopped out, and you're just eating into your capital. And that's why I'm saying the second candle above the ATMA, that's the candle, and here it is. Here's your first one. Here is your second one, okay, and here is your third one, and it's up. And if you go look anywhere else, let's have a look here. So it's one. I think this has opened. It's because this is such a sharp north that it looks like it's below. But in actual fact, this candle is above the ATMA. So it's your first one, your second one, and then we were north. So let's go back in time. There. Here's another choppy scenario over here. 1, 2, north. Okay. There's not. If it's one candle, you're usually gonna get stopped out. So let's check here. I'll do over here. Okay. So it's 1, 2, and then up. So it's 1, 2, and we're out of this band here. So there's can you see the band? It's like a little block here. Okay, it's almost like a pennant. It is a pennant. Okay, so it's the first, the second, and then we were north. So if you did, so over here, you were 1, 2, there. Here's a false positive over here, but here you had a doji anyway. So you wouldn't have been in the market anyway. And it's at 12 o'clock at night. This is probably at 12 o'clock at night, that doji. So very, very seldom do you get that false positive on the second candle or above and below the ATMA. Okay, just rely on that second candle. Once you've got that, then you can go north. Second candle above, you're going north. Second candle below, you're going south. Okay, so nothing's happening. All we know is that it's going north. We're probably going to retrace now back to the ATMA. The price is probably going to retrace back here. If not today, then tomorrow. So what will happen is that the moving averages will start moving up, and then the next candle will open here, and then it'll come down, and then it'll probably shoot back up again. Or possibly we may get a false breakout tomorrow of it going down and the bank's driving it down, and then all of a sudden it's just going to shoot north because of the results that are going to come out of America. Okay, so
can I just ask you a question quickly, please?
Yeah.
Rolofia.
Yes.
Just say the first candle that breaks through the ATMA.
Yeah.
Do you open that trade when the second candle opens, or do you wait for that second candle to close?
When the second candle opens above the ATMA, you can go north.
Okay, good.
So I'm a little bit more aggressive, and sometimes I open about on the first candle. I open a small one above, like the ATMA, one small trade above the ATMA. And then when the second candle opens above the ATMA, I then go aggressive. And when it breaks the fractal, then I open like my third candle, my third trade. And then when it retraces back to once it's broken that fractal, okay, it usually retraces back to the ATMA. And when it hits the ATMA, I open up my fourth one. So I'm very aggressive with that. And it's to get back to my conversation about risking 1% of your capital. There's no right and wrong here. You've got to feel it out and say, what am I prepared to lose from a monetary perspective? How much am I prepared to risk on money, okay, in a trade? And it's going to take you time to work that out and say, I'm prepared to lose, $500 or $1,000 or I mean, my trades are huge. I mean, I'm using 20 and 30 and 50 and 77 lot sizes on a cent account, which is it's a 7 lot on a micro. When it goes south quickly, and it does get frightening. And this is why you need to know how to read the Forex chart, because it is a calculated risk. It's like walking into the casino and counting cards, where okay, that the next, or being the croupier and spinning in roulette, and you're a good croupier and you can spin within 2 numbers. I don't know if you've ever seen that. Okay, good croupier can spin within 2 numbers. He'll tell you, okay, put your money on 38, and like 70 to 80 to 90% of the time he'll hit that number. That's what this is, and the only way you can do that is if you study the strategy, and it works. It's the cleverest strategy I've ever seen in my life. There's no other strategy to beat this. I haven't seen it. When you find it, please tell me. I'd love to learn it. So it's the second candle above, okay? So when are we going to get out of this trade? You're just going to let it ride. It's not costing you anything. So leave your trade alone. So yesterday, my number here was changing from 350 to 0. Okay, I was thinking, oh my God, please go north. This has to go north. I want to get out of this trade. And this morning, today, it's like $2,000 plus. So pretty sure that I'm going to be able to get out of this hedge, which is very exciting. Okay, and hopefully we're going to make a ton of cash. So you're going to wait until the second candle opens below the ATMA, and then you will close your hedge, and then you will, if you want to, and if you have enough margin percentage, you will then go south. Now, just opening and closing the hedges, if you get it wrong, you're just going to eat into your margin percentage. So you must make sure that the currency is going to go down, so that you do start gaining margin percentage level. I don't just want to gain margin percentage level and crush the hedge. I want to make money. Okay, I don't just want to break even here. That's not what I'm doing. Okay, I want to make money. Breaking even just gives me my money back. It's like betting on black, and then you lose black, and then you bet another one on black, and then you win black. You've broken even, and that's 15 minutes of your day gone. I don't want to do that. So that's why I'm saying on the second candle below the ATMA, you can be aggressive, okay, and you can start playing properly. Once you get this right, okay, you're going to love trading, addicted, I assure you, and you'll start trading. You'll start trading manually a lot more than the EA. The EA is lovely, okay, it's nice. It makes you a nice passive income and everything, and you can rely on it. But when it goes crazy, the EA, it is a huge advantage. It is such an opportunity for you. And people are saying, oh my God, I'm going to lose my money. You're not going to lose your money. You're going to lose your money if you do nothing. If you do nothing, you're guaranteed to lose your money. Guaranteed you're going to lose money. Okay? Here is an opportunity where the EA is just buying and taking and getting you into a position for you to make a ton of cash. Take advantage of it. It's amazing that we've got this. Just by the way, I've never seen a trend like this before. Never. I've never seen it go up so much so quickly. It's 335 pips in like 3 days. That's mental. That's more.
Alan, I think the call's about to drop.
Okay, cool. So then we'll connect again. It's 447 pips in 3 or 4 days. That's crazy. I've never seen that before. Not on Euro US dollar. On Japanese yen, EJ and GJ, I've seen that. Not on this. Okay, groovy. So now what I'm going to do is I'm going to allow you to ask questions. Guys, you need to ask questions. You don't have me often. Okay, and I don't like doing these Zoom calls. And just by the way, I forgot to do my disclaimer. None of this is trading advice. Okay, I'm not a financial advisor. I cannot give you financial advice. I'm not approved by the FSB to give you advice. So I don't advise you to do anything. You need to make your own decisions. I'm just telling you what I do. And this is my strategy and how I do things. How you do things, you need to take responsibility for that, okay? And I recommend that you trade on demo before you do anything. Or if it was me, if it was my account and I was a novice, I would trade on 0.01 to understand what the consequences are of these decisions, and also to get au fait with these strategies. This is not a 5-second watch one video and I'm a professional trader and I know what to do. So please note my disclaimer. Okay? Do you guys want to ask questions?
I have a question, Alan.
Sure.
So when the second candle opens below the 8 EMA,
Yeah.
and your hedge is
Blue.
has gone back into red,
Right.
do you just leave it?
You leave it. Why don't close trades in negative. Please God, this will be the last time you ever close a trade in negative. This closing trades in negatives and having a stop loss. Yes, have a stop loss. I agree. Not a stop loss. Instead of having a stop loss, have a hedge trade. Why would you want a stop loss? Why would you want to lose money? Change your thinking. Everybody needs to change their thinking. So if you're going to go to bed and you're concerned, okay, and the currency's here and you think, okay, I don't want to lose money, let me rather put a stop loss here. Why would you do that? Don't put a stop loss. Do a sell stop. So if the currency does go down and reverses, you've got your hedge in place. So this trade, your buy will go negative, your sell will go into positive. Okay, by the time you wake up, you'll be below a fractal. Okay, wait for the retrace back to the 8. Place another aggressive trade. This is what I would do. Place another aggressive trade. Okay, ride out, make profit on the way down. Your one buy trade's going to go red. You're not going to see this often. This is unprecedented. It doesn't happen. Okay, it's just because the countries are in chaos. I mean, you're going to have a 21% unemployment rate in America. It's going to be bigger than the Great Depression. What America has done by funding their economy, okay, of $4 trillion, has just created the biggest recession the world has ever seen. You cannot do that. You cannot fund and just fork out cash without consequences. Look, there's major consequences of just printing money, and the consequence is inflation, okay, and deflation of the contraction of the economy. It's just ridiculous, and the only ones that get rich, okay, of the pumping of the money are the corporates. Us people, we don't make any money. We see nothing. So Shell and Exxon and all these corporates, okay, they'll go to the government and say, we need a bailout, okay? And then the owners of those banks and the directors, they get fat salaries. It doesn't filter into anywhere. I don't know if you saw the latest one. One of the banks, they got a bailout, and what they did was they increased their salaries. It was advertised, they increased their salaries. I mean, that's just like ridiculous. And they still retrenched. So what was the point of the bailout? Where did the money go? So the only people that get rich is corporate America in these situations. So now we're going to see the brunt of this whole printing of cash that has just occurred, and we'll see it on Friday, where I'm telling you this currency is going to go to 1.48. So hedge, and let's make money. Okay. So again, if you're going to go to sleep, instead of placing a stop loss on your trades, rather put a sell stop. And if you south, instead of putting a stop loss above, rather put a buy stop. And if it goes and it activates your buy stop, wonderful. What an opportunity. You're not going to lose money. You're going to just make money. It's just like, I don't know why people aren't talking about this more. It baffles me. And people are scared of hedging. Just start trading. That's what happened to me. Get your feet wet on demo. Check it out. Try. My mentor said to me, just trade. Not on demo, trade live. That's when you really feel it. You don't feel it on demo, he said to me. You don't feel it on demo. It's different emotions. When you're trading live, you're shaking. Your heart's palpitating. You're nervous. Your palms are sweaty. You think, am I going to make a mistake? Have I made a mistake? Have I made the right decision? Did I count up the lots right? You know how many times I counted the lots wrong because I was under pressure? You see, this is why people make mistakes. So instead of freaking out, plan, okay? Know where you are. So when a new trade opens, have a piece of paper or an Excel spreadsheet and say, right, a new trade is opened, let's add the trade. So if it does go against you, you've already got your calculations and you're calm. Even better, open up the trade section and put in your lot size, 1.07, and close it. It's there, it's saved. So when you open it again, it's there. When a new trade opens, you'll then plug in the new number, whatever it is, 1.27. Make sure that you're on the right currency, because when I close out on my phone, it's going to revert to AUD USD. So when I go to trade, you see that, AUD NZD. Okay? So you need to have your wits about you. You need to know these things instead of being under pressure. Okay? And then trading pressurized, trade calmly, know where you are. Okay, so then you're going to change it to AUD, Euro, USD, or whatever currency you're trading. And another tip, don't trade multiple pairs. How did I get good? I traded one currency for 3 years. That's all I traded. One currency for 3 years. Didn't trade any other currency. You can't, if you trade more than one currency, you're going to get confused. You're going to confocculate yourself and get into a state. That's what you're going to do. So don't do that. Rather become an expert in one currency and get good at it. Understand it. Understand where your resistance and your support levels are. Understand how fast it moves. Okay, and why it moves that fast. If you're jumping between different currencies, you can't do that. You can't know the speed of a candle. Okay, that's why I say when I talk about it engulfing candle, I know what I'm talking about here because I've seen it and we wait for it. Does it make sense, everybody? Do you have any questions?
Total mind shift, Alan, but yes.
It is. It's a total mind shift. My whole trading strategy is very different to what everybody else is doing. Okay, my strategy it enables you to take full advantage of this trend. Okay, full advantage of the trend. If you followed it properly and you stayed in the trend and you waited and you didn't get out, because you're only getting out when the second candle opens below the ATMA. Okay, I didn't even listen to my rules because I was on that support resistance level and I thought, you know what, I've made my $2,000, let's get out. You know how much money I just wasted here? I wasted about $10,000. That's what I wasted, $10,000. Because I got out over here and the candle, there was no candle that dropped below the second candle did not drop below the ATMA, and there is no candle, okay, there is no doji anywhere. Only time there was a doji was at 12 o'clock at night. It was over here. Let's just check that out. There. What is that? Time? 12 o'clock at night. There it is. There's another one over here, 12 o'clock at night. These dojis don't lie. Okay, 12 o'clock at night, there's no liquidity in the market. Why would you get out? And I'm a doers, I got out. I wasted $10,000 and I can't get back in because I don't know if it's going to turn. So I'm waiting for the candle to come back to the ATMA and then I'll jump in for a 10 lot because I got FOMO. I got FOMO big time. So that's the story. So there was no reason for me to jump out. Nowhere was there a candle, 2 candles below the ATMA. I should never have jumped out. There was no sell. There was no sell signal anywhere. And I didn't listen to my rules. Sometimes you get emotional. It is what it is. Okay, but I'd rather not get in the incorrect place, okay, and lose money. So although I'm aggressive, I'm conservative where I take calculated trades that are going to work out in my favor, not a calculated, like a risky trade there where I'm going to lose money. I'm sick of losing money. I'm tired of it. When you blow R1 million in the space of 2 weeks, it's sore. It's quite painful. So that's my story. Got questions? Let me help you with questions. What are your challenges? What challenges are you having now that we understand hedging? Do you understand hedging? Do you understand when we're going to close the hedge?
Yes, absolutely.
Yes.
Okay. So, and you understand when you're going to open the hedge?
Yes.
My rules are different to your rules. You need to have, your rules, you need to say, okay, well, what am I going to risk? Am I going to risk 5%? Am I going to risk 10%? Am I going to risk 20%? What am I going to do? Having these big drawdowns, I don't know if it's so necessary anymore now that we know that we have a handbrake. You have a handbrake, use it. Okay, it's there. It's a tool. Use it. Use the tool. It's gonna help you. Now that you know how to use it, you can use it. So now you need to decide what your risk factor is. It's 5%, 10%, 15%. Your time constraints, your lifestyle. You know, my lifestyle is trading. This is the sickest industry I've ever seen in my life. Okay, I've never seen so much money in all my life. Never. Okay, I had big businesses, but this is insane. This is where you can make, when you get to an account of $10,000, $20,000, and you're doubling that every month or every 2 months. Let's be conservative, 25%, 25 to 30% a month, conservative. Okay, so you're doubling your account every 3 months. So in a year, you've made 300%. So in $100,000, you've made $300,000. You made $300,000 profit. Okay. $300,000, that's 6 million, just below, sorry, 5,500,000 rand. Okay, that's what this industry is. I've never seen that before, ever. It's a huge advantage. It's like, so my trading regime is as follows. I'll show it to you. Is it on this phone? It is on this phone. I have it on both phones. That's my, oh, I don't have it on this phone. This is my trading regime. Have a look. Where is it? Do that again. Right, that's my trading regime. 3 o'clock in the morning, okay, 5:30 I wake up, 7 o'clock is the next candle, 11 o'clock is the next candle, 3 o'clock is the next candle, 7 o'clock is the next candle, 2300 the market closes. What happens? 3 o'clock I'm up. I'll do this for a couple of years and I'm done. I'll never have to work again. Neither will my family. Neither will my kids. And my kids will probably never have to work ever again because of this, if you know what you're doing. So would it be worth it? You've got to decide for you. You've got to decide for you. That's my trading regime, and I'm cool with it. Okay. My mentor said to me a couple of years ago, he was standing up, Matt Morris. Okay, I was doing network marketing with a company, loved it, absolutely loved it, loved the whole culture of it. And he stood up and he said, get good at something worth getting good at. Network marketing for me at that time was worth getting good at, and I got damn good at it. And I built massive teams. I built a team of 32,000 people. So I had massive teams, but I wasn't in control. The company crashed. I lost my income. I did that in 4 separate network marketing companies. And I'd say, I'm not doing this again. I've got to find something. And eventually got into the robot and learned how to trade. This is worth getting good at. Just go through my course. Go slowly. It's not going to be 5 seconds. It's going to take you a little bit of time. But the question is, will it be worth it? Would it be worth, okay, giving the finger to your boss, okay, or living the life that you want to live? Would it be worth it? Firing your boss. To me, that's worth it. Any questions? And I'm here, guys. Jeez, I'm so active on the groups. You guys don't utilize me enough. You really don't. I've got knowledge. Some of you don't have the knowledge. Utilize it. If you want a Zoom call, okay, we'll do a Zoom call. I'll put it on the group. We'll all have a Zoom call together, and everybody learns that way. I'm available. I love it. I love you guys. Thanks for putting your trust in me. It's my pleasure to serve you. You pay me a lot of money for this, to serve you. So take advantage of it.
Alan,
Yes.
can I ask, is there a relationship between the drawdown and the capital exposure?
Is there a relationship between the drawdown and?
The capital exposure.
It's the same thing.
Right, okay. So if it gets to 5%, that's when you step in and start hedging.
This number here is your exposure. The red. This number here.
Oh, yeah.
That's your exposure or your drawdown. Okay? So there was, somebody said that there was another difference to the word drawdown, and that's why we started using the word exposure. And I can't remember what it was. So
when the EA is trading, in the bottom corner, it shows your drawdown.
Yes. Yes, so that was before we learned what the word drawdown was, and I'm just not prepared to get the engineer to change it for us. It was something that I asked him to add in so that we could see what the total exposure was, because some people didn't know how to work it as a percentage. So I said, log into your server, and in the bottom right-hand corner of the chart is your drawdown, your exposure. But it's the same thing. It's the same thing.
Okay, so I could just watch the EA working as long as the drawdown figure, exposure figure, doesn't get to more than 5%.
That's up to you. My limit is 5%. Like 5 open trades. So EJ. Okay, so EJ was going south, and I thought, you know what? This thing is not going to stop. I could see from the chart. You see, I don't watch the numbers, guys. Okay, I'm not watching the numbers. I'm on the chart, so let's go there. Let's go to which phone am I on? Let's go to EJ. EJ. Okay, I could see. Okay, that this thing was just gonna There's my open trades. Here's where it started. Okay, and I thought here's the candle, and I thought this is it. It's broken the structure. It's above the fractal. This thing's going north, and it ain't gonna stop. I thought, you know what? I'm hedging. I'm hedging, and I'm going to make my money. I'm going to hedge, and I'm just going to make it let it go north. Okay, and when it reverses, okay, that's when I'll close out my hedge, and I'll be aggressive, and I'll go south, and I'll make my money there. So I'm just waiting. I'm doing nothing. So there, and it's going to pump. It's going to go to the top here, and then probably because that's your support resistance level. There it is over there. Maybe it'll go more. Who cares? Don't care. Don't want to predict. Whatever it does, it does. Okay, when it turns, I'll then take advantage. When it turns, I'll get involved. I'll close my hedge, and I'll take my profits, and I'll ride it all the way down south. Don't predict. No point. Most of the time when you predict, you're wrong. So don't predict. Question.
I got a question on the videos. You have mentioned some usage that you do on the awesome oscillator and the other indicators for closing the hedge. Do you use this as a confirmation, or just opening the 2 candles above or below the exponential?
They just it's like people use the MACD, the RSI, and what's the other one? The stochastic. So it's just another. They're all basically the same kind of oscillator. It just tells you the momentum of the currency. I don't like using them because it doesn't give you a clear indication. Oversold doesn't mean that it's oversold. Oversold just means that there's strong momentum. So oversold means that it's basically lots of people buying. It doesn't tell you that it's overbought or oversold. They're useless indicators. They're weak indicators. Okay. They're lagging indicators. Okay. I'm using, you see, all those indicators, all these indicators, everything on my chart are new indicators. They're 40 years old, no more than 40 years old. They're brand new. Okay. They're created in the Western world, in America. Okay, they're brand new. Candlesticks, 400-year-old strategy. There's so much data in this candle. Okay, it's like a what's it called? A CR code. What's the thing that picture? What's it called?
A QR code.
QR code. Yeah, it's like a QR code. There's so much data in it. Okay, and when you look at two candles together, it's amazing. There's so much information. You just got to learn what these reversal signals are. Created by the Japanese rice traders, the most successful traders in the world. Just go and learn them. There's 12 of them. I think they're on my course in my frequently asked questions section. There's a chart there with the I think it's 12 candlestick reversal patterns. Just go learn them. But together with my moving averages, I've gotten an advantage in the market. I've now turned my lagging indicators into a predictive indicator. That's what I've done, especially with the ATMA. I mean, I think you guys can concur. This ATMA is sick. It's there's nothing to beat it. Nothing. It's amazing. It works every time. And the other moving averages as well, like the 200 and the 50, they work. We don't know why they work, but they work. Thank God they work. We've now turned this minefield into a navigational atmosphere. We can navigate the waters, which is it's what an advantage. It's fabulous. Any other question?
Alan, if you're expecting the market to go north, at the moment I'm sat with a little bit of a loss, and I'm on sell trades. So obviously that would increase if it goes north. Can you just show us how to set a hedge for during the night? So you mentioned it before, not to do it now, but do it so that it goes up, whatever. Then the hedge will kick in.
So what you would do is you would add up your lot sizes. So let's say you only had, you were working on EJ and these were your trades over here. These are your open trades that you have. You would add up these trades over here. So mine comes to a 1.07. And then you can then place the buy trade of 1.07. Or you could say on the chart, at X place on the chart, we could say you can put a line over here. We don't get cut off. You can put a line like over there and say, okay, at 122.634, you put a buy limit. When the price hits that and penetrates it, your hedge will be activated. Okay.
So is that just by drawing the line on the chart?
No. You'd need to actually place the trade manually. So how you place the trade manually is in the top right-hand corner of MT4. It says there trade. So you click on trade. If you're on market execution, it'll activate the trade immediately. So I'm going to change over my accounts just to show you exactly how that works. I want to do it on that account. Okay, so on here, if you place a trade of 0.01, okay, and you press buy or sell, we're going to do a buy because we're in a buy market. So if we place a buy, before I do that, I just want to add this up. We've done it already, so we hedged. Okay. So if you place the trade at market execution and click on buy, it places the trade immediately. Okay. And there it is. There's the trade. Okay. So if you want to place a trade, let's say so we want to draw a line. You can either hit the cross or you can get a line, and you can say, okay, so that's the peak, which is, are we on the wrong chart? So let's go to the right chart. Okay, so we'll say there's the peak there. So let's say when that peak is broken, 12515. Okay, so we'll say 12515. We'll say buy limit 1.07. 12515. So it's not a bar limit, it's a bar stop. 1, 2. I can't remember what it was. Can you tell me?
12515.
12525. So 12526. 12526. 12526. Okay, and you place it. Now your order is placed. So when you go back to MT4 in your trade section, and the bottom here, there is your buy stop. Okay, if you go to the chart, you'll see that the line has been drawn over here. There it is at the top. So if I zoom out there, there is your buy stop. You can't really see it because it's on top of. I'll change the number. I'll change the number so that you can see it. Let me just. I'll put it at this level here, 3493. So to edit it, you swipe right, you swipe left, okay, and then you can click on the pencil. Okay, you click on the pencil on the trade to edit it. So I just want to get my line again. Give me a second. 3750. So you edit it and you say 3750 and you say modify. And if we go to the chart, you'll see there's the trade. It says their buy stop. So when the price hits that, okay, goes through that price, the buy stop will activate. Okay? Same thing, you'll do the same thing for a sell. So if you want to do a sell, it's a sell limit or a sell stop. So you click on market execution to drop it down, and here are your different types of orders. Market execution will trade immediately, and here are your different types of orders. So buy limit, okay, is basically if your buy limit is this. A buy limit is if you put the buy limit below the candle, okay, you can place the buy limit. So what that means is when the price retraces back to the 8, so if I put a buy limit here, I can put the buy limit on the 8 exponential moving average. So when the candle comes down to the 8 exponential moving average and I put a buy limit here, the trade will activate. I'll be in the buy, and then hopefully it'll go north. So I do that sometimes at night when I'm sleeping. If I'm really tired and I don't want to wake up at 3 o'clock, I'll then put my buy limits over here. A buy order is when you put it above the candle. The opposite, the converse happens in the sell market. You've got your sell limit and your sell order. Okay?
Okay, thanks.
That's the difference between the different orders. All right?
Okay, that's good.
Cool. Okay. Any other questions? No other questions? Okay, guys. Thanks very much. This is you making a reaction to my phone call. Yeah.
It's the end.
Yeah. Yes. Who's talking? Has nobody got a question? Can I end the call?
Yes,
Yeah, that's
thank,
fine.
thank you very much.
Yeah.
Okay, cool. Thanks,
you very
guys.
much, Alan.
Thanks so much. I'll publish
Thank
the
you,
video
Alan.
and take advantage of it. I'll put it on one of my YouTube channels and just take advantage of this hedging thing. It's you're gonna, once you start, it's such an advantage. Use it. Okay. Sweet, guys. Have a good evening. We'll see you on another call. Take care. Before you go, if you'd like to earn a little bit of Bitcoin, I give away 0.005 of a Bitcoin every single Friday to a random subscriber. If you'd like to earn that, there's a couple of things that you need to do. You need to subscribe to my YouTube channel, and how you do that is you just mouse over the video that you're watching, and in the bottom right-hand corner of the video is a YouTube icon. Click that icon now, so please pause the video. Go and do that step now. Once done, you can come back to this video and resume the video. Now, if you're not already logged into your Gmail account, then you'd need to log into your Gmail account. Now, below the video that you're watching on YouTube, there is a subscribe button. So what you do is you click on that subscribe button, and then next to the subscribe button is a bell icon. You can click on the bell icon. So please pause the video, go and do those steps now. Once done, you can come back to this video and resume the video. The next thing that you do is you need to give a thumbs up, and then in the comment section, which is over here, you can leave a positive comment together with your Bitcoin wallet address. Now you have to follow the steps exactly to be able to get that prize. So you need to subscribe, you need to hit the bell icon, you need to give a thumbs up, and you need to leave a positive comment with your Bitcoin wallet address. Only then are you entered into the competition and are eligible to win a prize if chosen. So if you want to win 0.005 of a Bitcoin, I highly recommend that you follow those steps, and then you'll be eligible to win that prize. So good luck, and I hope you win that prize. And if you do, remember to invest it in a passive income stream, and I'll see you on the next video.